Hello and welcome to this video for Fortune and Freedom. We have an important announcement to make. My old friend and co-conspirator Shay Russell will be joining Fortune and Freedom as a contributor. And this means that I thought it would be better if you sort of see her and hear her voice, hear how loud she can be, so that when she does write to you, you know what the face is behind the screen and you know the person behind the words. Now, Shay's a specialist when it comes to commodities, which is why she has an Australian accent like me. And she's also very bullish on those commodities. Shay, why are you so bullish?
Oh, look, I'm going to use probably the most hated word of 2020, and that is to say an unprecedented set of circumstances. I'm very excited about the future of commodities. I'm not doom and gloom on them. And the reason is because of a convergence of several trends. One of the big ones is the new energy transition or decarbonisation. So it doesn't matter what you call it, there is a wall of money that is moving society away from fossil fuels, well, relying on fossil fuels, I should say, because I don't think we're going to completely leave them in the dust, but to more cleaner forms of energy. So that's number one. The second reason is industrialization and urbanization of developing countries. I'm talking about continents like Africa or countries like India. And to a lesser extent, still half of the population of China is still quite rural. So these are sectors, there's a couple of billion people here that we're talking about. These are sectors of the world that are going to need vast amounts of resources to basically urbanize people or even just give people electricity. 16% of the world still has zero access to electricity. So industrialization and urbanization is very much about the electrification of the world. But the third reason, and this is sort of what I believe makes it I don't want to say the word mega trend, but it does make it does boost the coming commodities bull market that I think is going to happen. And that is these geopolitical fault lines that are revealing themselves. Now, the entire supply chain operates on the basis of just in time. We don't really stockpile anything anymore, and we don't need to. We get our resources from almost anywhere in the world. I'm sitting in a chair designed by somebody in Sweden, yet it was made in Vietnam, kind of thing, and then it got shipped to Australia. These geopolitical fault lines, as we've recently seen with the Russian invasion of the Ukraine, can easily fracture. Now, in this case, it's showing us that while Russia isn't defaulting on the supply of their commodities, it does go to show that access to them is vulnerable.
It seems to me that because of those three trends, investing in commodities and commodity stocks is probably the most interesting time ever to be doing so. And we've seen that reflected in just how volatile commodity prices are right now. What makes you think that it's not just a supply chain disruption issue in the short term, and that there's going to be a sort of a sustained bull market in commodities over a longer period of time that leads to not just these blips like we've seen in lumber and coal and copper and so on and so forth?
So, somebody asked me last night what my greatest fear was about calling for a commodities bull market. And my answer was that I'm 12 months too soon. Because of the supply chain disruptions, we have seen basically prices fly through the roof, but they're starting to settle back down again. However, I don't believe the coming commodities bull market is about resting on the current supply chains. Now, what might stifle it is slowing global growth. Now, we are going to see growth slow in America because of the Fed's basically probably going to have to engineer some sort of hard landing. We are going to see slowing growth in China because of their insistence on COVID zero. Now, they will slow the commodities trend. But what's really driving these commodity prices higher is going to be a complete lack of underinvestment in securing future supply. Now, this is where I can bore everybody with how few exciting new geological deposits have been found in the past decade. But we basically, since the end of the commodities boom in 2012, there hasn't been enough money spent on finding new stuff. And we drastically need to find new stuff. And the problem is, all the easy stuff has been found. And you and I have had this conversation before, is that it's costing more to access resources that are in the ground. So I think we're going to see a significant and a sustained investment in commodities, and that is going to help underpin this commodities bull market.
So that's like the supply side of the demand and supply argument. I think you've addressed both there. I want to dig in a bit more into the green tech story and that push to decarbonisation. For me, I'm bullish on commodities because I see that transition as being inherently flawed, and that it's going to create exactly the sort of shock that we've seen in the last 2 years when people realize that actually we need a lot of gas. We shouldn't have shut down those gas that gas production and those gas leases and those gas fields. There's going to be a similar sort of shock right across the other parts of the electrification and the greenification of everything, and there's going to be the same sort of scramble back to what is more effective and more efficient. But then there's the converse argument that if it does succeed and we do go very green, there's a huge amount of resources that we need in order to make that happen. Where do you sit on those two?
Look, I do agree that the energy transition is inherently flawed, and it's partly because it's being driven by governments. Governments are so desperate to move away from fossil fuels that they'll tell the market anything they want to hear in order to encourage investment one way. And as we know, the minute the governments start encouraging people to invest in something, it should make you think twice, because it's not always the most efficient form of investment. I think one of the arguments when it comes to the energy transition is we need to confront an ugly reality of just how the vast number of resources we are going to need to make that happen. And that is going to involve, oddly enough, an awful lot of traditional forms of energy, like gas, like oil. I can see you smirking. I'm a little bit worried about what you're going to say, in order to make this green energy transition happen. And I think that's my concern, is that we've got to talk about the unfortunate realities that come with making this transition happen. The question is, if we don't start insisting on a more efficient form of energy now, when do we?
Yeah, it does have to happen over time. I think nuclear might be one of the answers there. But let's move on to something that I want to really dig into with you, which is the idea that there's something really good about commodities for investors, something inherent about commodities that I think should make them very attractive to all investors. And the first angle of explaining that is that over the last few years, we've seen all sorts of crazy investment sort of themes that have popped up, like cryptocurrencies and the FANG stocks and NFTs and all sorts of other weird and wonderful things. And I think it's been very easy for investors to ignore those if they wanted to. So they didn't have to participate in the cryptocurrency boom. They didn't have to, understand what an NFT is. They didn't have to own the FANG stocks if they didn't believe that they'd continue to go up. But this commodity bull market, even if it's just the commodity chaos that we've seen over the last few months, that impacts people's everyday lives, whether they like it or not. And we're learning that right now in their household energy bills, for example. They can't escape this. So I think that really strengthens the case for why people need to be aware of and invest in commodities. Do you agree with that?
Absolutely. At the end of the day, we all have a lot of stuff, especially of us in, first world countries. I mean, just look at all the junk I've got behind me on my bookshelf. I have a house full of things, and we are consumers at the best of times. So I do think that any investors should actually participate in this coming commodities bull market, because we continue to consume these resources, whether it's through things like buying books or whether it is in the latest electronics. I upgrade my phone every 2 years without question. So commodities are a core part of our lifestyle, and therefore we've automatically got exposure to commodities through just general consumption. But this is a way of adding in the investment option for investors.
Trying to offset the cost of living chaos that's been happening. I want to read you an email from a reader that I received, which made me conclude that this person needed to consider investing in commodities. So I'll quote for the reader. It says, "I don't trust the markets. I don't trust China, Iraq, North Korea, or Russia. I don't trust the debt mountain. I don't trust the unsustainable amount of money pumped into economies. I don't trust the Fed. I don't trust the direction of inflation. I don't trust the direction of this pandemic, nor do I trust the feeble international attempts to contain it. And above it all, I certainly do not trust the outcome of COP26 and the continued environmental demise of our beautiful planet." Now, someone who's thinking like that, who has had enough of all of these games that are being played in geopolitics and the monetary system, in the financial markets, banking, wherever it might be, it feels to me that commodities are an antidote to all of that. Do you see that same way?
Actually, I do. I mean, it's really hard not to agree with that paragraph, isn't it? And the large reason is it's because we're talking about tangible assets. Now, in a former life, I was a gold rider and I was a big advocate of hard assets in the face of adversity. And I completely agree that access to commodities could be the antidote to that, because these are real items that have real value in the marketplace.
So let's move on to how everyday investors can invest in commodities so they can benefit from price rises. I'm sure a lot of people are thinking that this is sort of out of their reach, that it's got something to do with futures markets. And Nigel Farage used to be a metals trader on the London Metals Exchange. So it might seem like it's out of people's reach. Is that right?
I don't think investing in commodities is out of people's reach. I actually think investing in commodities is one of the most accessible forms of investment on all global exchanges. And I say this as an Australian, when our exchange is nothing but miners and banks. I think from an accessibility point of view, it really just comes down to what people's attitudes to risk are. Are they after, not so much, are they after a mature company that's likely to pay dividends? Then there are commodity types of companies that you can look to investing for that. Are you after the ones that are still developing and looking to be producers soon? Then there's that, there's still large expected share price growth to happen. Are you somebody who likes a punt and has no problem speculating in the market on a company that hasn't found anything yet, but they're convinced that if they just drill another hole, they will find something super exciting? Then yes, there is that sort of investment available as well. So I think that there is a lot more opportunity for investors in the commodity space. In saying that, having spent the better part of a decade writing about rocks and studying geology, I might be slightly biased.
It's too late, Shay. You can't change your specialization now. I want to challenge you with a more difficult question. Um, and this is with sort of what I'm struggling with right now about the commodities boom. And that's, we've seen all these price spikes in all sorts of commodities, some of it as we anticipated. And yet, it seems to me that the share prices of the companies that produce a lot of these commodities have not spiked in the same way. So today I spent some time analyzing a lumber company, a gas company, a food company, and I had a look at some share prices before we started recording to make sure I'm on solid ground here. The shares of the companies that you would expect to boom as a result of commodity prices spiking, that hasn't happened, at least not as much as you'd expect. Why is that the case if you agree with it? And what does it mean for commodity investors?
So, look, I'm still working on the reasons why I think commodity share prices haven't tagged along. One of them is we're seeing price spikes, not elevated high prices for a period of time. So when you're only seeing price spikes, people are naturally reluctant to buy in, because look, I've said this before, in particular over gold, but generally when gold goes up in a straight line, it comes down back in a straight line as well. And I think there's been that reluctance to invest just in case commodity prices do come off the boil. However, a sort of a theory that I'm working on right now, and this is based on a podcast I was part of just yesterday, is big money. So your fast money, your managed money, your futures, your open interest. It's withdrawing significantly and moving to cash. Now, I'm referring to mostly the US market at the moment, because I don't have data on the Australian market or the UK market. But what seems to be taking its place are retail investors. Now, retail investors can't move into these stocks with the same volume or speed or position sizing or dollar value, I should say, like managed money can. So the fact that we're seeing managed money or big money, I should say, move towards cash, but retail investors running with this buy the dip mentality, I'm not convinced that managed money thinks the big bull market is here as of yet. I think they're moving to cash because they're seeing bigger down days ahead rather than the big up days ahead. So as I said, I'm not completely wedded to the theory, but at the moment, these are the only sort of two conclusions I've been able to come up with as to why commodity prices aren't skyrocketing along. Commodity share prices skyrocketing along.
Let's move on to some specific commodities that you're especially enthusiastic about. Maybe we can have one for each of the three trends you mentioned. So one for the green boom, one for the geopolitical chaos, and one for that emerging market, I guess, resource demand boom.
Technology. Oh, okay. So the green boom green boom, urbanization, and the geopolitical demand. Am I correct?
Yep.
So green boom. it's a tie between silver and copper, just without question. Copper is critical for the electrification of the world. And anybody who's been listening to me for the past couple of years might be a little bit sick of this story. The other thing with copper, too, is traders in the copper market always operate on the idea that 5% of the copper supply could be ripped out of the market at any time. Now, the reason for this is there are a couple of really large old copper mines in the world, and they come offline all the time. So it's not uncommon for the biggest copper mine in South America to be flooded or facing civil unrest due to protests, or another shaft's collapse, minor collapse, I should just point out. So it's quite common for copper traders to operate on the idea that supply could be ripped out at any time. Now, the follow on from that is there has been significant underinvestment in copper to meet the electrification of the world as well as the green energy transition. Now, almost anything that requires electricity will have vast amounts of copper in it, and there has been significant underinvestment in finding new types of copper deposits. And also, too, copper doesn't come out of the ground easy. Like discovery to operation is a best case scenario 5 years. And that's if it's a good quality mine. It could be 10 years. So that's a vast undersupply there. Silver, same thing. Now, silver is silver is a superior electrical conductor, and it is not used in electrification as much as copper is because it is too expensive. But silver is used in technology quite a bit because there's a proper word for it, and I'm forgetting it off the top of my head right now. But basically, it sends signals quicker than copper does. So you'll find increasing amounts of silver in basically anything that needs to increase to the internet. However, we don't have enough silver to meet this coming demand. I read a paper in 2016 that says, based on known deposits today, there is not enough silver in the ground, not enough known resources to meet not only the energy transition, but to meet all of the technology that we're going to need by 2050. So that's a huge silver deficit, multi-decade silver deficit that I'm just going to put out there that's expected. When it comes to urbanization and industrialization, it's not popular, but coking coal. Coking coal is a key ingredient in steel. Now, there is experiments with using coking coal with using iron ore with hydrogen to basically scrap the steel. But it's still very, very new, and we don't know where that technology is going to go to. But the uncomfortable truth is we must have coking coal in order to make steel. And finally, when it comes to geopolitical tensions, this is a bit of a tricky one. At the end of last year, I said the nickel story was done. I didn't have much love for it. With Russia supplying anywhere between 15 to 20% of the world's nickel, stripping that supply out of the market will be devastating for the nickel prices we recently saw a couple of weeks ago on the LME. So I am, in the short term, based on the geopolitical fault lines, quite bullish on nickel. But also to a secure supply of platinum. Now, Russia isn't the largest producer of platinum. South Africa is. Now, South Africa has their political stability ebbs and flows. So while today's problem is Russia, if there were any problems to arise in South Africa, we would find our access to platinum quite constrained.
Yeah, it seems to me that the risk of that sort of political crisis happening in a whole bunch of major resource producing nations is rising very fast because of the food price inflation story, which is, food, agricultural commodities being another story. Have you got a view on this increasing calls about a coming food shortage globally, and also fertilizer as another Russian story?
So fertilizer, I'm not as familiar with. I've got to get a bit more across about it before I can make any in-depth comment on it. I have been following the green story coming out of the Ukraine, though. So when you're here in Australia and we're sort of an agricultural hub, you get a little bit disconnected from how reliant external countries are on other countries for their basic needs like grain. So Ukraine, I hate to be preaching to the choir here, but Ukraine's actually called the breadbasket of Europe because it supplies grain to 14 countries across the world, 14 major countries like Europe, like places in the Middle East, like India. They are absolutely reliant on the Ukraine for grain. Now, not only right now, the Ukraine should be getting ready for planting season. With the invasion going, it's almost impossible to see how they will be able to plant substantial crops. Now, even if they do manage to plant substantial crops, there is the risk that they will not be able to harvest those crops. Now, it could be because of fuel shortages, it could be because of equipment shortages, it could be, God, I don't even have the number of how many millions of refugees have fled the country off the top of my head, but it could simply because they don't have the labor there to tend to the farmlands. So I think it would be very wise to pay attention to the food shortages or to the grain shortage that is likely to have a long-term impact. You know, we're talking about something that hasn't happened yet, but we can see that there's a flow-on effect, and these can take 12 to 18 months to fix themselves, or maybe even 2 years. The biggest problem with a grain shortage, though, is that it risks leading to instability in poorer countries. As food prices increase in countries that aren't as privileged as the countries that we live in, it does basically it just increases the risk of, I'm looking for the best word, but we'll just go with internal political instability as as people are facing food shortages.
Yeah, I'm worried about expropriation of the natural resources that commodity investors then invest in a lot of places, especially Egypt and South America. Well, there you have it from Shay Russell. Look out for some articles from her. She calls herself a geology nerd. I think of her as a rock star. Shay, thanks very much for joining us, and to everyone at home, thanks for watching.